Welcome back to Gold Rush Reporter, your trusted source for real talk about gold, silver, and the truth hidden behind market numbers. I'm your gold analyst, and today we're diving into a story that most investors completely overlook. A story that could reshape the future of precious metals. Let's start with a simple question. How much gold and silver does the world really produce every year? Roughly 3,200 tons of gold and 25,000 tons of silver. That's only about 8 times more silver than gold. Yet the market tells us that gold is worth 80 times more than silver. Think about that for a second. The gold to silver ratio isn't 8 to 1. It's 80 to 1. 80, not 8. So if we produce 8 times more silver than gold, why is gold priced 80 times higher? That's not just a small pricing gap. That's a massive distortion. Something doesn't add up, and that's exactly what we're unpacking today. They're lying to your face, and almost nobody's noticing. Every single year, the world mines just 8 times more silver than gold. That's it. But the market insists gold should be worth 80 times more. This isn't just a random quirk in pricing. It's a financial time bomb ticking quietly underneath the silver market. Analyst Clem Chambers called it out perfectly. This ratio isn't natural. It's manipulated. It's a lie built and maintained by powerful financial institutions who benefit from keeping silver suppressed. For years, investors have accepted this manipulation as normal, but cracks are forming. The truth is breaking through, and when it does, the reaction could be explosive. The forces shaping this imbalance are bigger than simple supply and demand. They're geopolitical. As the US and China move closer to direct confrontation, economically, politically, maybe even militarily, governments around the world are panic buying gold to prepare for what's coming. Central banks are stacking tons of gold, not just to hedge against inflation, but to hedge against war, currency collapse, and systemic instability. But here's what almost nobody is talking about. When that wall of government money eventually turns towards silver, which it must, the market won't just rise, it could detonate. Think about it. The United States can't build ships without Chinese steel. It can't make microchips without Chinese components. Even basic items like nails depend on China's supply chains. In a world that's splitting apart politically and economically, hard assets like gold and silver become tools of survival, not just investments. That's why the current silver price isn't just undervalued. It's criminally absurd. The system is pretending silver doesn't matter. But when the global financial dam finally breaks, $400 silver won't be a surprise. It'll be the only logical outcome. So before we go deeper, make sure you subscribe and turn on notifications, because here on Gold Rush Reporter, we don't follow the noise. We expose the truth beneath it. In this episode, we'll break down how the gold-silver ratio became this distorted, why the world's power struggle is fueling the next precious metal supercycle, and how you can position yourself before the mainstream wakes up. This is not financial advice. It's reality analysis, the kind you won't hear on television. Stay tuned, because next, we're uncovering how the world's supply chains, industrial demand, and political conflicts are setting silver up for one of the biggest revaluations in history. The truth behind the gold and silver story isn't just about metals. It's about power, global power. For decades, America enjoyed being the world's only superpower. But that world is changing fast. China has risen quietly but powerfully, and now the tension between these two giants is shaping everything from trade to technology, from defense to commodities. This conflict isn't theoretical anymore, it's visible in the markets. And as history shows, when superpowers collide, gold always becomes the safe harbor. The difference this time is that the world's supply chains are tangled like never before. America used to build everything itself. Ships, chips, steel, nails, bulbs, engines. But now, it depends on China for almost every industrial component. Without Chinese inputs, America can't even make a basic 10-inch nail in large quantity. That's not a political opinion, it's an industrial fact. When a country loses control over its production base, it loses the backbone of its economic strength. That's why reindustrialization has become such a buzzword again in Washington. They're realizing that financial dominance means nothing if you can't produce what you need during a crisis. This dependency is what makes the current moment so dangerous. When nations begin to fear that their trading partners might turn into enemies, they start preparing for self-reliance. And that's exactly what's happening. The US is trying to bring manufacturing back home. It's pushing for domestic chip plants, homegrown steel production, and a new industrial strategy built around robotics and artificial intelligence. But this process takes years, even decades. Meanwhile, China continues to hold the upper hand in key resources like rare earths, magnets, and industrial metals. You can't build jets, missiles, or even electric cars without them. And that's where silver quietly sits at the center of everything. It's not just a precious metal. It's a critical industrial metal. It's in solar panels, electronics, medicine, batteries, and military systems. When supply chains tighten, silver becomes more than a commodity. It becomes a strategic asset. Now imagine this. If the world goes into a conflict where trade freezes or breaks apart, the demand for silver won't just rise, it will explode. Every government, every company, and every investor will scramble to secure what little is left. Gold may be the metal of governments, but silver is the metal of industry. You can't build without it, and you can't replace it. This is why the gold-silver ratio looks so absurd today. It's not reflecting reality. It's reflecting a manipulated system that's been ignoring industrial truth for far too long. And when the correction finally comes, it won't be gradual. It will be violent. Analysts who follow this closely have started calling silver the compressed spring of the metals market. Every push downward only adds to the force waiting to be released. The fundamentals are clear: limited mine supply, rising industrial demand, and growing investment interest. But beyond the charts and ratios, there's a deeper story. One about global realignment. When two superpowers compete for dominance, they both start hoarding resources. We've seen this in oil, gas, and now in gold. Silver is simply next in line. The US might be printing money to rebuild factories, but it can't print silver. And China, which already controls most of the world's refining capacity, knows this. So while politicians make speeches, the real race is happening underground, in the mines, refineries, and vaults. This is why the metals market feels tense right now. It's not just about inflation or interest rates. It's about survival, strategy, and control. Silver's time is coming because the structure of global power is forcing it. It's not about speculation, it's about necessity. When countries can no longer trust each other's currencies or supply chains, they turn to what can't be faked. Real metal. That's why gold is already moving up sharply, and it's why silver will follow with far greater speed. The setup is here, the imbalance is massive, and history tells us that once silver breaks free from its manipulated cage, it doesn't crawl, it launches. Stay with me, because next we'll uncover exactly how deep this manipulation goes and why the paper silver market could be the next domino to fall. For years, the silver market has looked calm on the surface, but beneath that calm sits one of the most manipulated systems in modern finance. On paper, silver trades like any other commodity: futures contracts, ETFs, and options moving prices up and down every second. But here's the catch. Most of that silver doesn't even exist. The majority of what's being traded in the global market is not physical silver you can touch, store, or ship. It's paper silver. Promises, contracts, digital claims, and derivatives stacked on top of each other. For every real ounce of silver sitting in a vault, there are dozens of paper claims representing ownership. And as long as nobody asks for physical delivery, the illusion holds. That's how the price has been kept down for decades. This manipulation didn't happen overnight. It was built slowly by big banks, trading houses, and financial institutions that learned how to control the price through massive short positions. By flooding the market with paper silver, they create artificial supply that keeps the price suppressed. Retail investors and even many institutions trade these contracts thinking they're investing in silver, when in reality, they're only holding a claim that can never be fulfilled if everyone asks for delivery at once. It's like a bank that only has a fraction of its deposits available in cash. It works until everyone shows up at the same time. The deeper problem is that this structure has disconnected the price of silver from its physical reality. While industrial demand keeps climbing, the futures market tells us everything is fine. But the cracks are now starting to show. In recent months, the silver market has entered a rare condition called backwardation. That means the spot price, the price to get silver now, is higher than the price for future delivery. It's a signal of stress, a red flag that says the market is running out of immediate supply. Normally, futures prices should be higher because they include storage and insurance costs. But when people are willing to pay more for silver today than for silver 6 months from now, it means they're desperate to get their hands on it now, not later. That's not normal. That's panic. And when you combine this with collapsing inventories on the COMEX, one of the largest precious metal exchanges in the world, you start to see the real picture. Registered silver in COMEX vaults has dropped by more than 15% in a year. That's tens of millions of ounces gone. We're now down to roughly 290 million ounces available. To put that in perspective, global industrial demand alone consumes over 1 billion ounces a year. The math doesn't work. There simply isn't enough physical silver to meet all the paper promises. This is where things get dangerous. Once industrial buyers, ETFs, and retail investors all start demanding real metal at the same time, the system will crack. The COMEX can settle in cash if it can't deliver silver. But when that happens, the trust in the paper market vanishes overnight. Investors will realize the only thing that matters is physical silver, the metal you can actually hold. That's when suppression turns into explosion. Prices don't just rise, they gap up violently. History has shown this again and again in markets where physical supply can't meet paper demand. It's not a question of if, but when. For too long, the mainstream media has ignored this story because it challenges the illusion of control that financial markets depend on. But the signs are already here. Backwardation, inventory drain, and delivery failures, they're all flashing red. And once confidence breaks, there's no going back. The gold-silver ratio will collapse, the price will surge, and retail investors will rush in too late. That's why it's crucial to understand what's happening now, before the crowd wakes up. Because when the crowd finally does, there may not be any silver left to buy. Stay with me, because in the next part, we'll explore how governments themselves are driving this shift. Why central banks are hoarding gold, ignoring silver, and unknowingly setting up the biggest silver shock of the century. Misunderstanding of how essential silver has become. In the next few years, when the world realizes it's run out of affordable silver, the ratio won't be 80-1 anymore. It could swing back to 20-1 or even lower. That would mean silver skyrocketing while gold merely climbs. The irony here is that the same central banks fueling gold's rise are also indirectly setting the stage for silver's explosion. By taking so much gold out of circulation, they push investors to look for the next best safe haven, and that's silver. The metal is still cheap, still accessible, and still underestimated. But that window won't stay open forever. Once the revaluation begins, it'll move faster than anyone expects. Markets are slow to wake up, but lightning fast when they do. Silver will not rise because of hype. It will rise because of necessity. It's the one asset that connects monetary stability and industrial survival. And when both forces collide, silver becomes unstoppable. So, as central banks keep loading gold and ignoring silver, they're unknowingly tightening the spring of the next monetary shock. The question isn't whether silver will catch up, it's how violently it will do so. When the monetary reset arrives and gold gets revalued to back new currencies or trade systems, silver will be pulled up right behind it. The difference is that silver's percentage gains will dwarf gold's. That's what makes this story so powerful. It's not just about owning metal. It's about understanding the chain reaction that's already in motion. And in the next part, we'll dig into that reaction, how technology, energy, and industrial innovation are turning silver from a forgotten metal into the most critical resource of the new energy era. The world is entering a new industrial revolution, and at the center of it all sits a small, shiny metal that most people completely overlook: silver. We often hear about lithium, copper, or nickel when people talk about clean energy and high technology. But silver quietly outshines them all. It's the best conductor of electricity on Earth. It moves electrons faster, smoother, and more efficiently than any other element. Every solar panel, every electric car, every 5G tower, and every smartphone depends on it. There's no substitute. You can't replace silver with aluminum or copper without losing efficiency. That's what makes silver so powerful and so dangerous to ignore. Right now, the energy transition is accelerating. Governments around the world are pouring trillions into solar energy, electric vehicles, and digital infrastructure. And each one of those technologies needs more silver than the world can mine. A single electric vehicle uses up to 50 grams of silver. Each solar panel uses 20. Multiply that by millions of cars and billions of panels, and you start to see the problem. The world already consumes more silver every year than it produces, and that gap is widening. Recycling can't close it. Mining can't keep up. Yet prices remain artificially low, because the paper market pretends there's an endless supply. But physics doesn't care about financial manipulation. When the real shortage hits, no amount of paper silver will fill the gap. Only physical silver will matter. This isn't a faraway scenario. It's happening now. Solar panel production is hitting record highs, and global silver demand from photovoltaics alone is projected to grow by over 30% in the next few years. That's not speculation. That's hard data from industry reports. Meanwhile, silver mines are aging. Ore grades are falling, and new discoveries are rare. It takes 10 to 15 years to bring a new mine online. That means we're walking straight into a supply crunch that can't be fixed quickly. The setup is perfect: rising demand, limited supply, and fake stability. When reality finally breaks through, it'll send shockwaves across both industrial and financial markets. And here's the twist. While investors chase gold as a hedge against inflation, silver is quietly becoming a hedge against energy scarcity. As countries fight to secure clean energy resources, silver's strategic importance will explode. Nations will start competing for it the same way they've competed for oil. Energy independence in the 21st century won't come from pipelines. It'll come from the metals that power solar grids and electric cars. Silver is the new energy metal. When investors realize this, the current price will look like a typo. What's fascinating is how history repeats itself. In every great economic transformation, one resource becomes the backbone of progress. In the 19th century, it was coal. In the 20th, it was oil. In the 21st, it's energy metals. And silver is their king. The industrial world can't function without it. Yet, it's still traded like a second-class asset. That disconnect can't last forever. At some point, the markets will reprice reality. And when they do, it won't be a gradual climb, it will be a chain reaction. The gold-silver ratio could crash from 80-1 to 20-1 within months, and silver could shoot from $30 to hundreds in the blink of an eye. Not because of hype, but because industry won't have a choice. It will pay whatever it takes to keep production running. The message is clear. Silver is not just a precious metal anymore. It's a vital industrial resource that powers the clean energy revolution. The more the world tries to go green, the faster silver will vanish from circulation. The same governments that ignored it will soon realize they need it more than ever. By the time they do, it'll already be too late to buy it cheap. The future belongs to those who understand what's really happening, not the ones waiting for the headlines. Because when those headlines finally arrive, the silver rush will already be underway. And in the next part, we'll pull everything together. The manipulation, the global power struggle, the industrial squeeze, to reveal how this all ends and what the real silver price might look like when the dust finally settles. Everything we've discussed leads to one unavoidable conclusion. The world is standing on the edge of the greatest precious metals repricing in modern history. The signs are everywhere. A manipulated paper market that's cracking under its own weight. Central banks quietly hoarding gold while silver stockpiles disappear. Industries devouring silver faster than mines can produce it. And a global financial system drifting toward instability. All these forces are converging, pushing us toward a moment when silver's true value can no longer be hidden. When that day comes, the repricing won't be subtle. It'll be explosive. Let's think about what happens when that break finally hits. The paper-silver market, built on leverage and promises, will fail to deliver physical metal. Industrial buyers will panic as they realize they can't secure enough supply to keep factories running. Governments will intervene to stabilize markets, but by then, the damage will be done. Physical silver will become almost impossible to find. Dealers will run out of inventory, premiums will skyrocket, and delivery times will stretch for months. In that chaos, the gold-silver ratio could collapse from 80-1 to 20-1, or even lower. If gold revalues to $3,000 or $5,000 an ounce, that would put silver somewhere between $150 and $250 per ounce. And that's just the conservative scenario. Some analysts project even higher, especially if a monetary reset links metals back to real assets. But beyond numbers, this shift represents something deeper, the return of honesty to the financial system. For decades, we've lived in a world where debt could be printed endlessly and real assets were treated like relics. That illusion is fading fast. Gold and silver are not just investments, they are truth measured in metal. When trust in paper fades, people turn to what's real. And silver, more than any other metal, represents that reality. Tangible, essential, and unforgeable. It's not a digital code or a government promise. It's a piece of earth that holds energy, value, and history. What makes silver's story so poetic is that it's both ancient and futuristic at the same time. It was money for thousands of years, and now it's the key to powering the modern world. That dual identity, monetary and industrial, makes it unique. Gold can store value, But silver fuels the next generation of technology. It connects the old economy with the new one. That's why the coming revaluation won't just be financial, it'll be transformational. The world will rediscover silver's true role, not as a secondary metal, but as the foundation of the future economy. So, where does that leave us as investors, analysts, and truth seekers? It means this is the moment to stay informed, stay awake, and stay ahead. The mainstream media will catch up later. They always do. But by the time they start talking about silver's unexpected rise, the real opportunity will already be gone. Remember, wealth doesn't just move, it transfers. And in every major shift, it moves from the unprepared to the prepared. Don't wait for permission from the system that's been lying about silver for decades. Understand the fundamentals, hold real metal, and think long term. Because when the new financial era begins, those who understood silver will not just survive, they'll lead. And that brings us to the end of today's deep dive. If you found value in this breakdown, make sure to like this video, share it with others who care about real financial truth, and hit that subscribe button so you don't miss the next analysis. Here on Gold Rush Reporter, we go beyond headlines. We decode the data, connect the dots, and expose what the markets don't want you to see. I'm your gold analyst, and this has been another truth-packed report on the coming silver revolution. Stay sharp, stay informed, and as always, stay golden.